Good morning. My name is Franco and I'm with Trading Futures Live. And welcome back to another trading session live stream where I show my trades on real life, my real account, and I will try to be the most transparent for you to see my trading and how I trade and see if we can do this together. All right. The market just opened. I'm a little bit late. This is the first day for me to do this alone. But yeah, I like to watch the internals, right? My trading is a very short-term trading oriented, right? I do trade more than one account, so I like to sorry about this. I like to set up more than one account, so let me go to Katana group accounts settings. All right, so my real account. My real account. There we go. All right, and I'm copying the funded account with Apex. I do trade my real account and I do take a funded account with Apex. I try to mirror those trades. All right, so my trades today will be risking $320 per contract per trade, right? So I do set up a trading risk management for each trade every day. $320. There you go. On the pre-market live, I was talking about the dollar, the VIX, and bond yields. Those three charts are very important for today's trading session. I'm leaning to I'm neutral bias short, meaning that the market could, in my perspective, could stay in a range, or if I have the opportunity, I would rather short than going long, right? But before we put a trade, is very important that I tell you that trading is inherently risky and you can lose all your capital, right? So please don't mirror our trades. We do this for our own accountability and for educational purposes, right? And with that, we can go to the charts. All right, it's very early to call so far, but the ADQD opened up on the positive side of the chart, as well as the tick chart for the NQ. Now I do entirely focus my trading on the NQ futures market. But I like to watch the rest of the markets. Like for instance, the NQ is the one holding the better. ES is dropping a little bit after the open. And the other three, like the RTY and the YM, are similar. The NQ is kind of like holding better. So here we have two charts, the 7-minute and the 3-minute. I like to, this is a very odd time frame, I understand, but I got used to trade off of the 7-minute. And I got this from dividing by 6 pretty much all the higher time frames, like daily, 4 hours, 40 minutes, and then 7 minutes. After month and month of testing and trading myself, I got to the 7-minute to be pretty good for me. And when I say pretty good for me is because this is very personal. Like what might work for me probably don't work for you, and vice versa. That's how trading works. So this is the overnight high. We have these blue lines. This is the overnight low. So we are trading right in the middle, right? And if we go to the daily chart, let's go to the daily chart. We are in a around probably 40% retracement, right? 50% was yesterday down here around, like approximately, right? So it's right in the middle of the chart. So it's not the time to be very, very aggressive, because we could go to either direction. Although I do have the VIX and other assets signaling to me that we could have some more downside if we follow through in that in those assets, right? For instance, I do have the dollar right here. The dollar started to retrace back down. We didn't break all the pivots that I draw in the morning, so we're still close to the closer to the demand than the supply. So let's see what happens here. Now the NQ is turning a little bit more bearish than the other ones. Like RTY is holding and YM is holding as well on the open, whereas ES and NQ are dropping a little bit. By the way, this is a very, very important area on the pre-market. If you guys see here, to pivot, and then we have this consolidation area right here, right? So this will be a very nice area for the pre-market. Let me move the chart to the left so you guys can see on the pre-market yesterday during Asia. We had these two pivots created, then we broke to the upside. Now we're holding right there. So that's a very good pre-market area to trade off. All right, the ADQD opened up to a positive side of the chart. Now it's retracing back down. Same thing for the tick chart. We created a low. It's for me, it's too early to call as of right now. I need more candles to give me a bias on the internals. Now I think the most valuable trait that you could have as a trader, could have as a trader, is patience, right? I am very patient. Like I had the hard way. I had to develop some patience, so I don't rush into trades that are not necessary. All right, so I like to assess the volume. So what I do here is that I compare the first 7-minute, the entire 7-minute candle to close into the trading session, and it tells me that the volume today is to the lower side. So a little bit lower though. We don't have much economic news reports today. We did have some Schiller We did have some housing numbers. We had job job openings is at 10, so that's the one that we have to pay attention to. JOLTS job opening. We did have some housing price indexes and stuff that are not very impactful to the market. But yes, we have to wait for the consumer confidence and the JOLTS job opening at 10. So let's set an alert right here. What I like to do so we don't miss it. $9:57 economic news. There we go. So this thing is set already. All right, so we're starting to see some bullishness here in the market. So this candle is 3 more minutes. So the way I like to see this is, all right, I have this pivot created here. Now I'm watching a 500 volume bar. So this pivot created here, right? You see it here, this high of the 3 minute. If we break to the upside, we can retest it and come back up, right? We do have a lot of sideways trading right here. So this sideways trading, if we break it, it can fuel our push to the upside. ADQD is dropping, but on the positive side of the chart, so that makes me a bit confident if I want to play a reversal right here. All right, let's see what the dollar's doing. The dollar is just holding close to the demand, so it's creating this stairway pattern to the upside on the 5 minutes. First choice for me is just wait and be patient. We haven't broken the overnight low yet. We do have news coming up at 10. So it'll be pretty much a catalyst today. There you go. So we went through the demand of the pre-market. Now we're about to break. We are about to break the overnight. We're close to the overnight. For those who know my trading, knows that I don't like to trade overnight areas. I rather just wait for it, and since I trade very short time trade, short time frames, is more like a volume chart what I trade. I like to wait for it to create a an area of demand. All right, new 15-minute candle is opening right now. Even though the tick chart is coming more negative, I don't have like a very extreme and solid to the downside. Now, tick chart is retracing to the zero line. Is yet to see if it's going to reject every time it comes to the zero line. Now, for those who think it's boring not to take trades and seeing the chart moving, I do like a high probability setup for myself, and I've learned the hard way. I've been doing this for 5 years, and I've lost too much money just trying to catch up with the market, either chasing or trying to guess the direction for the recent movement. So I do think there's a valuable for me to give you this information that patience is a trait that you have to focus on developing if you want to be a trader. All right, we're just breaking the overnight in all of them, but the RTY is way below the ES. The YM just barely broke it. Let me see. Not really. Not really. The YM is about to, and the NQ is holding right there. The ES broke that aggressively to the downside. Feel free to type in anything, any question that you have in the chat, so we can make this more like a interaction type of live stream. We did have some sort of reaction off of the overnight, like is usual. Like the overnight low or high are very sensitive points. All right. If I have a retracement to the downside, I will be taking this. Right, the ADQD came close to the zero line, meaning it's already exhausted. The tick chart did not create a very extreme low. It was around 360. And it started to create like I do have on 945, which is here. 945 is around here, right? So this low here on the markets is lower on the tick chart. So that's a sign of a reversal right there. So I do have an order at 4950. It's 2 more minutes for the 7-minute to close. Ideally, I like to trade the 7-minute open, but Let's see if we can have some upside from here. What the dollar is doing, the dollar is close to the first rejection, but is on the still stairway pattern to the upside, slowly grinding up, right? All right, and this thing is not looking very good, but it is what it is, guys. I do have a setup, and I need to follow it. Now, the tick chart is making a new low, though. That's not good. The tick chart created a new low. So this is the 7-minute. I'm about to, it's 9 seconds for it to close. Let's see if we can have a spike to the upside. Okay. So right now that I'm close to 1-to-1, I'm going to move the stop because this is a very risky trade. The tick chart just created a new low. So now I'm at break even. There we go. They took me out break even. If the tick chart didn't make a new low, I will be more confident on this trade. So they took me out break even. Now this is exploding. That's okay. My target was 526. 526. There it goes. Let's see if we can fill up the target. There we go. So yeah, I was taking out break even. I was taking out break even here. This is my trade today. It went to my target. That I will have to review if I just move my stop too fast, or the volatility just took me out. Tick chart came to the zero line. Now it's rejecting to the downside. ADQD touched the zero line and now is holding right there. That's what I call, or we call, tradable reaction. We do hit a demand zone or a support area, and then price reacts of the zone, and it gives you some profit, right? It's a real quick profit taking trade. It's not a trend trade. Now the overnight is holding pretty nice right there. If the 3-minute drops to the drops here and creates a new low, then we will have a better bearish case. Just one more minute for this to happen. And the 7-minute looks like it really looks very negative right now. All right, so we are set up for the shorts. And what I need to see is, let me see if I can put, let me see if I can pull up the, all right, so let me pull up the tick chart and the ADQD. I'm gonna move myself out of the way. There we go. All right, so, all right, we do have the reports in 3 minutes, so that's why it's very useful to put alerts. All right, so this is the tick chart. All these weeks are pretty bullish, although they're on the negative side. Like I would like to see them like this here on the 0 line. If we did see all this and then reaction to the upside, but for now I do think it's a pretty bearish case, right? This was my trade. When I was in the trade, this thing hit a new extreme negative. That was very scary, but I couldn't do anything. I already was in the trade. I just said it was not looking good because of this. But then we had this rejection that was my target, but I got out break even around here. So that's fine. It would have worked, but that's the life of a trader. You make mistakes and you try to amend them or learn from them, right? The ADQD right now is a pretty bearish case. Now what I want to see right now is this. A rejection to the upside, to this blue box, and the tick chart around here or above for me to take a short. And for that, we require a lot of patience. So let's go back to the charts. And wait for the trade to unfold. "40 seconds for the news report. Look guys, trading is very hard in every sense, but I think waiting is hard. I certainly know that waiting is hard, but I think losing money is harder. So I think I rather just deal with the pain of waiting or not taking trades or being taken out break even than just losing trades. And I had to learn that the hard way, like I've said. All right, so news came out. We did have a little bit of volatility, not much. go check on the investing.com website. It hasn't refreshed yet. So consumer confidence came very high, a lot better than expected. And JOLTS job opening. Wow, 11 million point 23. Ooh, that's a lot. So good news for these two reports that came out, and the market is reacting positively. Yes, sir. JOLTS job opening 11 million point 239. Wow. The estimate was like a little bit lower than 10.5. The market is holding right there, but the dollar is going up. So both of them are going up. That means one of them is going to change, either the dollar or the equity markets. There you go. I did have one trade long. It was a break-even trade. I took out break-even and then it went to straight to my target. That could happen to my trading. On the recaps, you guys can see how many break-evens I do have. All right. We did have the tick chart going up to the here to this extreme, and that was the high created on the current candle, but we did not have this retracement. It was very shallow. It was very shy here, so I wanted a nice pullback, nice healthy pullback, for me to take this short. Now this is a very cyclical chart. This will be retested along today, and we will have more opportunities. So let's wait for it. What is your guys your take for the markets? Feel free to type in so we can share our beliefs about the market. New low on the ADQD, new low on the tick chart. Pretty bearish case. We are down 0.5% on the indexes. The RTY is the one dropping the most, 0.80%. I want to check here. This does not look good. So I do have this pivot right here being retested. If I really want to trade something here, like I like this pivot here. Sorry that you guys cannot see it. Let me see if I can put my 500. Yes. transfer this. Hello, hello. Oh yeah, my 500 share bar does not have the mic though. Oh, there we go. Can you hear me now? Yeah, the 500 share bar. I was talking to myself, but I was talking for like 10 minutes. This is my 500 volume bar chart. Oh, there we go. Thank you, Tom. Thanks for the feedback. Yeah, yeah. I'm just getting used to this thing. All right, this is my. I have an order there at 73. I think the bearish case still on. Ideally, I would have liked the ADQD to go up in a chart manner. Like, let me see if I can pull that out. Yeah, I would have liked this to come back up here. Nice for the tick chart, came back to the area and then it rejected it again, but created this low. Created this low, meaning a higher low. This type of like, it is in a wedge, it's gonna break up to one side, right? I like to see and read the internals in terms of trend. I'm gonna continue showing my 500 share bar, which is the one that I trade off. There you go. I did have a trade earlier. It was a long and it took me out break even. I moved my stop. I think it was too fast. I'm gonna review the trade later for the recap. It was a little bit faster than usual because the tick chart did make an extreme low, showing some bearishness right there. All right, tick chart back in the blue box. ADQD is going up. I need the retracement for me to take a short, so I can take it as a healthy pullback. Well, I have a saying, if it's not scary, it's not a good trade. But you can trade the same thing with the ES. I do happen to trade the NQ, but it is the same for the ES, mostly the same areas. On the pre-market, I did some review of the areas that I have for the yeah, I understand you trade the ES. I think they're pretty similar. The NQ is a lot faster, I understand that. I just got too used to the NQ. And I do have fairly down risk for each trade that I take here. For instance, I'm taking a $200 risk in this trade. It's not much for the NQ. Now, For me to take this trade right here, ideally a pullback like this, and then the movement now that is going sideways, is the bull case is getting stronger and stronger. Meaning, if we come back here and then we happen to have a pullback, now here this consolidation area is gonna start to attract some buyers like me and you guys, right? So that only that could make this area to hold. So I think my probability in this trade is decreasing with time. Let's go review some auto enhancers that I use. So we do have the VIX. The VIX held that pivot high that we review on the let's see if I can show this chart. Let me see if I can. The pre-market. All right, I need to switch to this chart while I prepare that one. There we go. Pre-market. All right, on the pre-market, we did review the VIX, right? I said white line is a very important area for me to take into consideration, and we didn't came into this. We just started to go up, and the case for me to say. It says, are you buying 436? 436. No. That's, sorry. I'm not buying this, but I'll come back to tell you what happens here in the chart. I'm gonna review the VIX before. So I do have this strong case where the VIX comes down, it creates a pivot, it rejects it, and then explodes. Comes down, creates a pivot, rejects it, explodes. Come down, creates a pivot, rejects it, and explodes. So now we're in the stage of we already created the pivot, came down, and we are about to, or we are going back up, right, off of the demand. Now, for those who don't know, the VIX is a tradable asset. There are VIX futures that people actually trade. But the index, the one that I'm looking at, comes from the amount of put option buying in ratios and stuff. So I had this trend line here. We broke it, then we came back to demand, exploded, right? We created a pivot, came back, and now we're exploding. That's why I was leaning to the short side today. And I will be leaning to the short side until the VIX is at 29, around 29, right? Or we suddenly change to the downside. About your question, when I put the order, and I'm gonna show you, I'm gonna cancel this order because it's very, very far away, right? But let's say I want to trade. Let me open up this chart, right? Okay, let me transition here. There you go. All right, let's say I want to trade this area. So I click short, right? And this is the area. And what this makes for me is that it calculates the risk and reward ratio. For instance, 5 to 1. You see here risk and reward ratio of 5. Here will be my stop, S of stop, entry, and target. Right? I just use one target, but you can customize this: 2 targets, 3 targets, whatever. So when you click submit, if you trade off of Ninja, it usually does not put the a bracket order right away, but you need to wait for it to fill your order, right? But with this thing called Katana, we do have the orders right away. The position size, yeah, let's turn up this. If I click submit, so this is my order that is alive, right? And these two are virtual orders waiting to be filled. When this order is filled, they turn into real orders, right? This is my target and this is my stop. That's why you saw I was buying, but I really wasn't buying. It was my target. Did I answer your question, Tom? No problem. Thank you. $400 to 240, I do have a demand, and buyers are trying to defend the demand. That's why volatility just dropped at that, like it dropped, right? It hasn't moved very much for the last 10:09. Now is 10:30, like 20 minutes, right? Buyers are trying to hold this. Do I have a bullish case? That's the question that I asked myself. Do I have a bullish case? And then I go to the internals. I go to the internals and I see here. All right, the ADQD came up. I was expecting these to come to my supply, didn't come, right? And I started to continue the downtrend. Here on the tick chart, came back up to the blue box, and it created a fresh new low, which is this, which is a week creator right there in 3 minutes. So as of now, I do not have a bullish case. So do I want to take a long right now? I wouldn't. Now the short, depending on the location. The closer to current price, the less the probability of my trade. Meaning, if I want to short suddenly from, let's say I want to, let me transition here. Let's say I want to put a short right here. Is this the highest? Is this the, compared to this location? Let's say I have this short, and then I have this short, then I have this short. Which one is higher probability? Well, I do use the location as my primary weight gauge, or not gauge, but my primary making decision matrix is based on location, right? So what means location? All right, I need this not to be attracted to buyers, meaning if it ran up to the upside like around 500, is that attractive to buyers? Not anymore. But right now it's very attractive to buyers because it's coming down, right? I'm not I'm not catching a falling knife, um, but sometimes I could do it depending on the location of the demand and how important and high quality is the demand, right? Um, so for me, um, the 467 is gaining a lot of um, probability. Is close to the overnight low, right? If we have a retracement to the upside, buyers are already have been bought since 350, so they probably will not want to keep buying, but they want probably a retracement. And that's how I think on my trading location. I like to see pivots. Like I want pivots to give me some resistance. Like I do have all these. I have 434, uh, but 434 is not very good. The one that I really like is this one. Is 485. Now the markets are in a bearish case, like we predicted in the pre-market. Um, in reality, I didn't have any opportunity. If you see the eight and how I assess that I did not have too many opportunities to the short side based on my trading. Like probably other people trade differently, and they could just jump right into the breakout. And but that's not my trading. My trading is just a pullback to an area, and then. So how can I say, Franco, you just missed it? This thing is running without you. Um, it is running without me, but the reality is that I don't have a system just to jump right in because I've been burned out of taking too many breakout trades in the past. So the ADQD, this was the only retracement that I could have taken. But other than that, it's just straight down. So I'm not worried. Like if I don't trade today, I will trade tomorrow. My goal for the week is 4R. I did make 2 yesterday, and we are just at Tuesday. Hmm. Let's go check on the dollar. Wow. I think we will have the opportunity here with the dollar. Let's see if I can move this screen. This is the analysis from the morning. And I do have these pivots. I think the dollar might come back to this area. That is going to be our short, nice short here, right? When the dollar comes back, we broke out of these pivots. We haven't go through this, but it's okay. It comes to this pivot and then comes back to this, and that will be our shorts. And the equity markets will retrace back up anytime today. I think so. That's what I'm expecting or waiting to happen. So we might have a retracement and then our short towards the end of the day. Now my question is, let's go to the daily. All right, so we broke all the lows and we are in a new fresh weekly low. And the long-term time frame does not look very good. This yellow line is the ATR extension. The ATR is the average true range. It usually, this calculates automatically the pivot high towards the current price and what's the ATR for the last 10 days. And this is the extension. So this is the line that we use just to try to see how stretchy is the market, how far can it go. Now if you guys compare this chart, right, look at this, this volume chart, the volume from today compared to yesterday. This is yesterday. Yesterday was a lot lower, but a lot lower. I'm talking about, look at this, solid candles to the upside. This is 21,000 every 7 minutes. Now yesterday, after the first 7 minutes, it died to 15, 14, 16, and then it started to drop. Not right now. Right now it's very high volume. As a matter of fact, we're about to have a massive candle to the upside in terms of volume. Why is that important? A lot of orders are being filled right here, a lot. I still have the bearish case with the internals, creating new lower highs and lower lows. So I'm not stressed about, oh, this thing is gonna reverse, I'm gonna just take the long. I will not take a long as of right now. If I do have a change of scenarios, tick chart and the ADQD, but for the ADQD to change, it takes time. It takes a lot of candles formed. Dollar continues to go up, is hitting my white line, and if like I'm thinking the dollar just retraces back down, that will mean a retracement on the equity markets for me to short. Realistically, it looks pretty ugly, but this could just create a retracement pretty sharp to here. I do like all this pivot, by the way. Instead of this one, I like all this. I'm gonna stay for a little bit, but I don't think I will have any opportunity anytime soon, because I'm expecting the dollar to retrace a little bit, and if it doesn't retrace, like I will not take any trade. Sometimes this thing moves 1.5%. I did not have one opportunity, and although I did have one opportunity on my trade, I got stopped out break even, and then it worked. I haven't had any good solid entry to the short side. Wall Street Journal will have, is that on the schedule? Give me 1 second. Yes, yes, we have William, FOMC member Williams speaks on the Wall Street Journal, I don't know, Wall Street Journal event at 11, so we might have some movement here. So Federal Reserve, let's see if we can put that live so we can hear it. All right, let's put this on. All right, let's set a timer here. 14 minutes. Dollars continue to go up. It's amazing how we can have very good news like the ones that we had today. Consumer confidence through the roof, JOLTS job opening like came a lot higher than expected, and then the market just fall off a cliff. Like, don't try to understand this. Is not understandable. I think we can translate to this thing saying, all right, now more hawkish Fed is gonna come and destroy the market, destroy the economy, and they feel like they have more room to do that. and then the market just anticipates to Fed's actions. That's the only reasoning that you can give to it. No pullback on the dollar, no pullback on the equity markets. I've always have asked, after I learned how to trade a lot better, but my first 2 years were chaos, right? But right now I learned, like, all right, it's bearish, it's dropping. Do you want to just jump into this thing, just drop, and you might make money, right? You might make money from time to time. But if I want to just jump into this thing short, I'll be chasing, and even if I make money today, I cannot make money consistently. And that's the question that I ask myself. If you enter this trade, is it a high probability, high expectancy trade? And where it is right now, sadly, it's not. I'm sorry, Tom. What about now? Let me see if I can just turn it up a little bit. What about now? Little better. I think I can change this thing. Give me 1 second. Alright, I think it's the best settings that I can put this thing on. I know. Is there anyone there that have problem with their audio? I promise you tomorrow I will, for tomorrow's live, I will have this thing fixed. Still no change on the ADQD. Actually, we don't see too many days like this from plus 1400 on the ADQD to minus 2135. I think there's still a lot of audio is good. Okay, thank you, Lee. Tom, I might check that, but on my end, but I think probably you two have some settings that is screwing your audio. Check on the YouTube. It might be my laptop better now. Okay. Check on the YouTube browser, if it's a browser or the app. Check on the actual volume there. All right, the dollar. Let's see if we can have a pullback here in the dollar. So this is the dollar window. This is the dollar window. I said the white line might be a point where the dollar can start to retrace. Let's see if we can have some downside from here after this guy for New York Fed is talking. See if we can have the short right here. This might be the movement. Actually, after the break, we had some retest right here, but it was so fast. Like, I wasn't paying attention here. Take chart to the zero line. Created a bit like a higher low here. Created a higher low here than this one. So this is sort of a trend change here. If I can get this to at least this. If I can get this to at least this point, and NQ just retrace back up for me to short. What I'm going to do, I'm going to put this window so I'm going to review my areas here. So it doesn't look very likely 467 because we're 170 point below, but this is the higher probability area that I have, this one. All these opened up at 10 a.m. Now this one is 23.30, yeah. I would say around here, this one, but I don't want to get too alright, this one, this is not my favorite. If I take the 414, it's going to be confirmation. Other than that, it's just as what we call a racetrack. It's just a free path to the upside. There's some sort of like a sideways movement here, but not really something that I will trade off. Probably this. I have this retest here. All right. 6 more minutes. If you see the if you see the 7-minute chart is just opening, so I might take this. All right, where is the ADQD? All right, ADQD. I might have a bearish trade here, but I don't want to be very aggressive. I'm not going to be very aggressive though. I'm going to do this. 32.40, how much is that? $160. There you go. $160. And let's put this screen. and I'm gonna take a confirmation. The bracket is right there. What I need to click is submit. So what I'm going to see is the ADQD coming back up, right? This is a very aggressive trade. Please don't take any trades that I take. It's very low on the curve. I'm gonna take a confirmation for a continuation. This is a low probability trade because of the location. I did have some sort of retracement, which is fine. I just need this to probably test these lows and come back up, or if it's gonna come up, I don't want this to base before, right? And the tick chart, this is a key. ADQD already going up, that's fine. Tick chart not making a fresh high. If it makes a fresh high, there's a no-no for me, okay? So I'm ready for it to be taken. All right, so the market is creating a new high, but the tick chart is not. That's a good sign. See if I can pull this up. There you go. All right, so this guy is about to start talking in 45 seconds. So I can put it here. So this thing went through, and the tick chart went through as well. So there's no zone for me to be taken right now. And it's a good thing that I see the this thing. Give me 1 second. I'll show you the tick chart. So pre-market screen, there you go. All right, so there you go. Here you can see how this thing just went through the highs. I didn't want this thing, so I had it. That's why I didn't put the order on. So we are going to go to the next zone. Next area is 1414. Sorry, 12,414. 12,414. This is the importance of trading a good location. So let's get rid of this. See if the event already started. No. So there's John Williams, president of the Federal Reserve Bank of New York, asking questions about the U.S. economy outlook. That's gonna start shortly. We did have that in this schedule at 11 a.m. So I do have this event right here on my other screen, ready to put it on. I'm gonna take 1 minute break. I'm coming right back.
Come in pretty weaker than maybe expected, but the
That's
labor market
Williams,
has
Fed
remained very
New
strong,
York's Fed
and the inflation data
president,
have been
speaking.
coming down a little bit, which is encouraging. Overall, I think the picture is very similar to where it was in July. Inflation is kind of following what I was hoping to see. Some falling inflation rates and some good signs there. But again, I think the real news here has been the labor market's been very strong despite some slowing growth in the first half of the year. So we're coming into the second half of the year. I think still with some positive momentum. The economy is growing, labor market's very strong. Of course, inflation is far too high, and that's really where we're focused, is bringing inflation down.
So the two big data reports before your next meeting in September, we'll get the jobs report this Friday. We'll get another inflation report in the middle of September. Chair Powell last week said that your next interest rate decision would depend on the totality of the data. So what information are you looking at to determine whether to raise interest rates by 0.5 point or 0.75 of a point at your next meeting?
Well, I always go back to our dual mandate, maximum employment and price stability. Again, our focus is on getting inflation back down to 2%. It is far too high. So we're watching the indicators from inflation. As you said, we'll get another CPI report. We'll get another employment report, and looking at all the other indicators, like job openings and indicators of consumer spending and inflation expectations. So it really is looking at all of the information in total. But I'm, of course, very focused on what's happening in terms of drivers of inflation. What are we seeing there? Given that that's the number one problem that we're facing today.
If the labor market is as tight as you've suggested, would that argue for more front loading of your rate increases?
Well, I do think if you look to our past two meetings, we made the decision to move 75 basis points then, and that I think made it complete sense. We had strong labor market, inflation far too high, and the need to get interest rates higher to get slow demand and make it more in line with the available supply in the economy. We have clearly an imbalance where demand far exceeds supply in the economy. That's creating inflationary or contributing to inflationary pressures. So looking back, it was really about getting monetary policy more to a position that's will slow demand enough to equal supply. Obviously, as we think about the next meeting, we'll be weighing
For
all
those
the information we
who
have
just
and coming
joined,
to a
this
decision
is
about
the
what the right setting of
Federal
policy
Reserve
is.
New
But
York
again, it's really on the totality of all the data.
So I'm going to work
president,
in audience
Federal
questions here.
Reserve Bank of
Tim
New York,
asks, what is the
President
cost
Williams
of raising
speaking.
rates 75 basis points relative to 50 when the
The
Fed
dollar is
projects
finally
that well
coming
more
down.
than another 75 basis point of rate hikes is needed
Dollar is
to
finally
bring
coming
inflation under
down.
control?
Well, I think the question is framing the issue well, in the sense that
Dollar
we
is
really
finally
do have to
coming
think
down
about this
here.
about one meeting. But where do we want to see interest rates?
Let's wait for it to
By the
come
end of the
here,
year and into next year.
and
So that's how I think about it
is
too.
that what is
If
going to
based
give
on the
us
data, it's clear that we need to
the
get
short
interest rates
on the equity
significantly
markets.
higher by the end of the year, then obviously that informs the decision about at any given meeting. In terms of the costs and benefits, I think it's really about getting monetary policy in the right place, making sure that we're creating conditions such that demand is more in line with supply. We always have the opportunity at the following meeting to adjust, the policy actions as well. So it's not like you make one decision once and for all, but you really think about the path of policy. So I think that you will really depend on how strong the labor market is, what we're seeing in inflation, getting that, making that decision, and then thinking about obviously what do we do next time and the time after.
So that's fair. A lot of these questions that you get are about tactics. Monetary policy has to be forward-looking. So I am wondering about the destination, the terminal rate, as it's sometimes said. In June, you said in an interview, we are far from where we need to be. Do you still feel that way based on the outlook right now? How high do you think interest rates might have to rise here to get the job done on inflation?
Well, my first answer is going to be it depends. It depends on the data. But here's how I think about it. I do think with demand far exceeding supply, we do need to get real interest rates. That's the interest rate adjusted for inflation above zero. We need to have a somewhat restrictive policy to slow
Wow.
demand.
This
And we're
guy
not
is
there
saying
yet.
that we
So
need
if
to
you
go
think about
above
next year, if
inflation
inflation is say
in terms
somewhere
of
between
interest.
2.5
That
and
means
3%, a lot lower than now,
8%.
but that's kind of the forecast
Wow.
that I think is reasonable. We're
That is
thinking about
certainly not a
having
good
interest
news.
rates that are well above that, because it's the interest rate minus the inflation rate tells you what the real interest rate is. So we're so quite a ways from that, and I think that to me that's one of the benchmarks. If we need to get the interest
Wow.
rate relative to where inflation is expected to be over the next year into a positive space, and probably even higher than the longer run neutral level, which I think is around a 0.5% on real interest rates.
So before we get into that, can you explain why is it that the real rate is what matters for the setting of interest rate policy?
Well, I think actually nominal interest rates, the actual interest rates do matter. If you're paying a mortgage, you're looking at your monthly payments, whether you can get approved for a mortgage depends on your ability to pay every month a mortgage rate, which is affected by the interest rate. But I think economics and experience teaches us that you have to think about, well, what's the interest rate relative to inflation? So say you're a business and the inflation rate means that you're able to sell your products at every year, but 3%, or higher prices each year, then that cost of them, in a sense of paying back the original loan, is lower because you have more and more revenue. Similarly, when you're working, if you have inflation of 2% or 3%, you see that your income goes up over time, and your ability to pay a given interest rate is easier. So we really want to think about is the interest rate adjusted in a way for the fact that the prices are going up over time.
So you've done a lot of work in an academic setting, estimating the real neutral rate that is likely over the long run. We often talk about a corresponding nominal neutral rate that assumes inflation is 2%. Assuming that the real rate is still positive, does that mean you want to see interest rates rise above the rate of inflation to provide restraint to the economy?
So when you look at the analysis we've done about what this long-run neutral interest rate is, it's always in terms of a real interest rate for the reasons we just discussed. And again, a typical estimate of that is, say, something like 0.5%. And so if you add 2% inflation, that would be the 2.5 that you see discussed as a longer run, neutral nominal interest rate, because the Fed's target is to have 2% inflation in the longer run. So the way I think about it, in our economic analysis, kinds of tends to support this, is basically where's the federal funds rate less the inflation rates they expected over the next year. So to me, a real interest rate has to be forward looking.
All right, so let's get rid of this guy. The only thing that is very interesting that he said is we need to take interest rate above the expectations of inflation in the upcoming years. So that will mean more hikes on the Fed. Now, I want to show you this. This is a dollar. I was expecting this to retrace back down and come into the demand. We did not taste the demand. We're just going back up from here. And that is translating in this drop. Okay, so in the next 5 minutes, if we have a retracement here, we could take this thing to the downside. Confirmation as well because of the location. I really wanna see the dollar chart just giving me better signals. As of right now, it looks like the dollar is just, it didn't come to my demand, it came shy. What I need to wait this for this is just a tick chart. Wow, the ADQD just collapsed. That's not good. That is not good for my trade. Again, my entry point, 12,350 one quarter. I'm gonna risk 10 points to this. I could actually, but my risk and reward ratio is gonna be screwed. This is what I'm gonna do. There we go. We're watching a little bit of volatility here. Check on the VIX. VIX, wow. VIX came to the high of yesterday. If the tick chart does not create a new high, that order is going to be activated. If it creates a new high, then no. There we go. It's a fairly low risk, like $240. It did not create a new high. "30 seconds. Wow. It was so fast. It was so fast, this thing. All right, he's coming back up. Yeah, it would have been a break-even trade though. All right, I'm in it. I'm in it short. Let's see if we can get the push to the downside. All right, I got stopped out for a what is going on here? I still have one trade on my second account. I need to close that. Yeah. There's a computer error right here. All right, so that's a losing trade that I took. It's a losing trade. I am -1 R. I took 2 trades, one losing trade and 1 break even. So with that, I think I'm gonna close this live stream. If I take another trade, I will record it like always, and I will post it later in the chat. But with that, I'm gonna try to do the live stream tomorrow for the pre-market a little bit earlier. See you guys all tomorrow. Thank you.